But Godrej Consumer is clearly the stock on our radar, buzzing in trade on the back of a decent quarterly performance. Aasif Malbari, the CFO of Godrej Consumer Products, is with us to discuss their performance. Mr. Malbari, thanks a lot for joining in. If you could give us a sense of how the start of the new financial year has been, and what is your expectation in terms of demand trends? What are you gunning at for the India business particularly?
Sure. So thank you for having me on the show. Yeah, so to start off with, I think we closed the year reasonably well with an underlying volume growth of 9% in Q4, closing the year at an underlying volume growth for 7% for last year. As we are entering into the new year, there is cautious optimism in terms of better weather conditions, better monsoons, and hence some bit of rural demand picking up. So we remain quite bullish in terms of the environment.
All right, Aasif, what about your volume and revenue growth projections that you have for the coming fiscal?
No, so we're coming out of a base where we have seen a significant commodities now flattening out, especially in terms of palm oil. There was some bit of an inflationary pressure in terms of palm oil for the last quarter. And hence, a lot of the price decreases which we've done in order to kind of pass through the commodity benefit to the consumers are flattening out. So we do expect sequentially prices to kind of go inch up a bit. And hence, there will be a positive price growth going forward into next year. So to that extent, this year we had actually overall revenue growths lagging the volume growths. But next year, we definitely see sales growth ahead of volume growths. As a company, we have said our aspiration is to stay in terms of high single-digit volume growth. So we should be able to sustain that kind of performance going forward next year also.
Right. Now, what kind of growth do you see in the home care and household insecticides segments in FY25?
So in terms of household insecticides, we remain quite bullish. There have been a few interventions which have happened. And basis our new product range, we remain quite bullish that we should be seeing a few good quarters. And really, it's a large opportunity. Penetration levels are still quite low. So we do see an opportunity to kind of step up growth in household insecticides. This year also has been very erratic in terms of weather. And as things normalize in terms of weather, that also is an opportunity for growth to kind of step up. So clearly, household insecticides and detergents are going to be categories where we should see sequentially growth kind of stepping up from what we've seen in the past. Detergent, the mix has been received well. We've now got a portfolio of 3 brands. It's a category or a segment which has been growing well. And our new brands have also been very well received by the consumers. So we remain actually quite bullish on that segment.
Okay, what kind of synergies have played out for the Raymond business, and what's your target now as we move into step 2 of consolidation?
Sure. So the synergy benefits actually played out quite well. We delivered a double-digit benefit in terms of margin, in terms of synergy benefits. Somewhere around 15% cost benefits have been actually derived in Q4 on that portfolio. So we're quite happy with the way the business has got integrated and the benefits have been derived. In this quarter, we did around 137 crores on sales on that portfolio, which on a year-on-year basis is a 25% growth. So again, quite happy with the growth, quite happy with the way we've derived synergy benefits. And hence now the focus is to kind of continue to kind of grow the business.
Sir, would you be able to step up your quarterly run rate significantly? Can we see around 200-250 crores per quarter in FY25 and about 1,000 crores then for the year?
So, we have ensured that we first focus on bringing the entire business to a good health. A lot of SKU rationalization, a lot of reduction in trade inventory. We're clear that this is a category which offers multi-decades of growth opportunity. Clearly, it will be kind of strong double-digit growths, pretty much double of what we should be seeing for the company as a whole is what we should deliver on this portfolio for a couple of years to come. So don't want to kind of give a target number, but definitely significantly higher growths on this portfolio compared to the rest of the company.
Okay, significantly higher growth in this portfolio compared to the rest of the company. That's something the market would like. Aasif, now let's talk about Indonesia and Africa. The Indonesian business is on a pretty steady footing. Could you give us some sense whether that can continue going forward, and also some insights on the Africa business side?
So in terms of Indonesia, again, a very good quarter. We delivered a 12% underlying volume growth for this quarter. Overall, 11% underlying volume growth for the entire last year on Indonesia. The brands have been received well. The new mixes are doing well. We do see Indonesia business actually sustaining good steady growth for the next few quarters and for the years. We have done a lot of structural changes, and all of them are behind us. So we're quite bullish in terms of performance in Indonesia. Coming to Africa, a lot of hard work has gone in terms of making structural improvements in Africa. A lot of simplification efforts that has kept us busy over the last 6 months. As they have kind of more or less landed in this quarter, we've completed the reorganization. We've looked at what needed to be done from an accounting point of view. That's all kind of behind us. The focus is now to ensure that we get the right mix to grow there. And the ratio of the non-hair fashion to the hair fashion business is again kind of changing now. The entire FMCG business, which is really the hair color business and the wet hair business, is now actually higher in terms of salience compared to the hair fashion business. And that's the portfolio which actually is seen much higher growth in the past. So we're quite bullish in terms of growth going up. And also, as the economic environment now stabilizes, we definitely are focusing on improving the overall profitability of the African business. So that's something which you definitely will be seeing, the focus on profitable growth in Africa and in Latin America.
Your thoughts on ad spends as a percentage of sales, and what could your margins be going forward?
So I think we've had a significant increase in the ad spends over the last 2.5 to 3 years. We do believe that we've come to a level at which we won't have a huge step up from here on. It's likely to be minor changes from these levels. So no major step up required because we're well funded for our plans. In terms of the overall margin improvement journey from here on, we do believe that there is an ability to kind of work on margins from a mix point of view, country mix, product mix, category mix, and that's something which we will continue to remain focused on. And there seems to be an opportunity to step up margins in our overseas geography. So while we have kind of come to healthy levels of margin in India, there seems to be an opportunity to step up margins in Indonesia, in Africa, and in Latin. The economic conditions, as I said, have been very difficult in Africa and in Latin America, especially on the foreign exchange side, where you saw huge currency devaluations that did impact us in terms of profitability. As things start normalizing next year onwards, we definitely see that as an increase or a lever to increase margins.
Okay, Aasif, you've given us a fair outlook in terms of the operational performance. Let's get to some spicier details. Are you looking at any acquisitions now? Or do you plan to step up the synergies from the existing acquisitions that you've already done?
So I think we have firstly ensured that we've kind of gone to a cash positive position after kind of having taken over the RCCL portfolio. So that's one step. We've also kind of put a formal dividend policy in place. Even today, the board announced a dividend of 10 rupees per share. That's after 5 rupees, which we announced a couple of months back. So we have come into a rhythm of paying dividend, and we've kind of made a formal dividend announcement policy that we will continue to kind of allocate a part of our profits back to the shareholders in the form of dividend. Having said that, would we be open to acquisitions? I think that will kind of be seen from case to case. So yeah, it depends on really what comes our way and how does it kind of have a strategic fitment into our future strategy.
Okay, thanks a lot for that.